Hello, this is Randy Lindsay with Hawkeye Traders. Follow up on this week's action. Boy, it's been really bearish this week. Looking at the S&P 500, we were looking at the beginning of the week as a support level right in this area. I drew a line in the sand and price came right down to that during that day and held support, but then the very next day opened up and then crashed right through that and it came right back down to our second level of support right here. We were talking about a 3150 to 3120 level. Our Hawkeye volume, our Hawkeye Zones gave us these levels to identify. We know exactly where prior price action was, so we were targeting that as our second level of support. And then I said that if that level of support and if this downtrend line was broken, then we would be looking for around 2900 area. And I came up with that value simply by turning on my Hawkeye Zones. The Hawkeye Zones gave me these specific values that I was looking for. So I was looking for a break and a touch down to 2900 because previously we saw this is a demand area where buyers tend to be resting. They're looking to be buying the activity that comes back down into this area again. Historically, we see a huge volume buying spike here. Here is another really big volume buying spike here. Two more really strong volume spikes coming out of a demand area. So when price comes down into that region, we're looking for it not only to pause, but we're looking for a potential for this market to stall, maybe even start reversing. So watch for that. Another thing to look at is volatility. Looking at the volatility spike, whenever you see volatility explode this much and the market respond appropriately, then we always start looking for that volatility to then contract. So this really is more of a time to be looking at dip buying, looking at the possibility of that volatility being way overextended and then looking for it to come back down to earth. So watch for some potential rubber band trades coming in. Watch for this price range to hold and a potential for it to rally back up to over 3,000 again. Overall correction size, you can see that we've lost about 500 points if you look at the monthly. Prior drop in the S&P in later 2018, we had about a 500 point drop. This one, this month, we've seen we're looking at about a 520, 530 point drop. So it's similar in magnitude to the big 1 month drop that we saw back in 2018. So look at that as a potential to pull back in. The inside trend based upon that value will pull us down into about a 2650, maybe even a 2675 area, all the way back down to possibly 2600 or possibly 2500, and still be in a confirmed strong uptrend. So watch for this 2900 to hold. If that does not hold, then again we're looking to go down into a 27 region and maybe even back down into a 2400 that we were looking at to continue to hold this line. We have support built up in both of those areas and we're looking for that. Thank you very much for your time. If you want to follow along with this with your very own copy of Hawkeye, then click the links below and let us know if you have any questions. Thank you.